In this video, we're going to go through everything you need to know about PD array as taught in the ICT concept. Once you understand how PD array works, you're going to do wonders with the smart money concept. This is one of the topics in the smart money concept that you cannot ignore. What exactly is PD array? This is the first thing we're going to start. P simply means premium, D simply means discount, and then array simply means arrangement of items. So what this basically means is that you're going to learn how to practically arrange your institutional reference point according to order of priority. And then secondly, you're going to learn how to clearly define your institutional order flow. These are the two things that once you get, you'll be able to trade any financial asset. And that is why I'm using BTC USD in this particular video to show you that these concepts can work across any financial asset. So what you are seeing here is a practical representation of how to use this concept. There are a lot of you people that ask me questions like, how do we prioritize this? Which of these ones do we give more priority to? Is it an order block? Is it a fair value gap? Or is it a mitigation block? So all these ones have their importance, and I'm going to show you how to practically prioritize them. So what exactly do we have whenever we see a market? The market thrives on two things. The first one is price, and then the second one is time. These are the two major things that the market thrives on. Whenever you see price delivering liquidity from one side or the other, it is always repeating itself. It delivers liquidity from discount to premium, from premium to discount. And this is a clearly defined range. The first thing to do is to find your PD array in higher time frames, such as monthly time frame, weekly time frame, and the daily time frame. And then later you can go down to lower time frames and take your trades, because this is where you're going to start getting your institutional order flow. But there are some other institutional reference points that I make mention of here that some of you don't know how to identify them. I'm going to show you how to identify them on a chart. Then we come back and continue with our premium discount array. By the way, you can also find relevant tutorials on my YouTube channel, still on the smart money concept. You can see there are a lot of videos on the smart money concept. If you come to playlist and you check this particular playlist, smart money concept, you're going to get a lot of videos there. And even this particular video, it is going to take a bit longer. So make sure you finish the rest on my YouTube channel. That is where you're going to get the complete video. So look at this. What we have here is a range. We see a clearly defined range when we see something like this. Normally, when we trade, we want to see that price has delivered liquidity from a very clearly defined range. What we have here is a movement from this low to this old high. Okay, so from here to here, when we use our Fibonacci tool, we're going to get the complete defined trading range, which is identified by this movement. Middle of this movement, you can see that is the 50% level of that Fibonacci tool. It is known as the equilibrium level. It is known as the equilibrium level. Then above the equilibrium, we have our premium level. That's from here to here is known as your premium. And then below your equilibrium level from here to here is known as your discount. So what happens in the market is simply people buy from a discount and deliver it at premium. That's basic business principle. You buy low, you sell high. That is basic business principles. And that's what the smart money are taking advantage of. They buy at discount and then they sell at premium. Premium means expensive. So what you see here, every time, remember when we take trades, we want to see that movement comes and then retracement, we look for an institutional order flow. Okay. What we look for maybe can be an order block. It can be a fair value gap. That is basically what the smart money concept thrives on. So we're going to arrange them in order of priority. Okay. If we bring this one here, you may need to just take note of all these things. And then we bring this one here. When we're dealing with a discount level, once price came to a discount level, we're going to prioritize them according to this. We're going to start by looking for a mitigation block. And then if we cannot find mitigation block, we go to a breaker block. If we cannot find a breaker block, we will go to a liquidity void. If we cannot find a liquidity void, so on and so forth. That is how we're going to prioritize them. But it does not mean once price reaches here and you see a mitigation block, you enter trade. No, you're going to use your basic understanding of the smart money concept, such as market structure. When you see a change of character, break of structure, these are the things you're going to use. I'm subsequently going to show you that. I'm just trying to explain how these things work for you. So let me show you how to basically identify a mitigation block and a breaker block, because I think some of you don't know this, even though I have a clearly defined video on those subject matter in this playlist. Very powerful subject matter, mitigation block and the breaker block. So a mitigation block looks like something like this. Can you see this movement from here to here? It's just like a failure swing where you have price comes to this level and then tries to push and create a new high, but all of a sudden crash down, and then this that was supposed to be a bullish order block. Remember, when you have a movement like this and it comes back, this may be your bullish order block and you enter trade from here and take it up again. But it never rejected price from here. It just traded through it and then took liquidity below it. If price comes back, this is now your entry. This is how people trade mitigation blocks. This is now your entry at this level. This is how to identify a mitigation block. I will show you that on a chart. And then this is a breaker block. Why is it a breaker? Because it has broken the last high that was formed, something like this, and then it came crashing down to the lower side. If price comes back to this place, this level, let me show you this area. This is where you can confidently enter your trade because of this block. It is no longer a bullish order block, but a breaker block. This time around, a bearish breaker block. We have a bullish breaker block and a bearish breaker block. We have a bullish breaker block and a bearish breaker block, just like an order block. And then this is also a bearish mitigation block. So when we are dealing with PDRA, we will need to prioritize this first. According to the arrangement, once price retraces below your 50%, let me put a horizontal line there, this line, and then delete this guy. Let me delete this one so we can have it. So from what we are seeing, this is our 50% level. If price comes to this level, this is where we're supposed to start preparing to take our trades and then create a new high, just like you see happened here. Okay, and then we're going to start looking for a mitigation block, which is something like this guy. If we cannot find it, we go to a breaker, which is something like this guy. If we cannot find it, we'll go to a liquidity void. What is a liquidity void? A liquidity void is when you see price suddenly leaves a particular level. Look at this range. Let me show you what I'm saying. Can you see a range here? This particular range, this trading range. After this range has held price for a while, it suddenly had an impulse swing high. So this that you see a very huge candlestick that printed is called a liquidity void. It's simply a buy-side imbalance. It is an imbalance in price delivery, where you see price quickly delivers liquidity from this level to this level where there are no sellers. Buy-side imbalance, sell-side inefficiency. So this is what we call a liquidity void. I'm going to show you those things one by one. Please make sure you watch to the end. I'm going to take time, but you're going to get a lot of value in this particular video. This is a topic you should not ignore. The next one is your fair value gap. I know fair value gap is something that I've explained time and time again, but let me show you what a fair value gap is. So a fair value gap is said to be seen whenever we have a 3-candle price action, whether in the bullish direction or in the bearish direction, with something like this. Look at what I'm saying. You see 1, 2, 3 in the bearish side. A healthy price delivery should have this one. Can you see the low of this candle? The low of this first one, if you're counting from here to here, the low of this candle, that's the wick, and the high of this candle must be connected. Like it must thread through each other to connect. That will give you a healthy price delivery. Just like you can see here, 1, 2, 3, you can see the low of this and the high of this are connected. So this is a healthy price action. But this, it left a gap. Okay, and this is the gap. Let me show you. This is the gap. Okay, this is the gap. I hope this is properly drawn. So this is the gap that is left, and this gap is simply what we call a fair value gap. So what price does is that it will always come back to this gap. Okay, it will always come back to this gap and then trade down, maybe to push price to another level, this gap. Just pay attention to this information. So this is how to identify a fair value gap. The candle color does not matter. The candle color does not matter. You just need to see 3 candle price action and then you're going to identify it. Let me delete everything here because I will be coming back here. I don't want it to be too rowdy. It is very important that you watch everything here. So the next one to do is to check for an order block. An order block is one of the things that almost everybody knows how to identify. Let me go to a MetaTrader 4 and see how we can identify an order block. An order block, we have a bearish order block and a bullish order block. An order block is simply when you see price moving. Let me see if I can see something like this. Can you see this movement? Price came, push to this area. When you see price push to this area, the last bullish candle that price printed in this regard, let me expand it a bit. The last bullish candle that price printed as price is moving, this bullish candle, some people will just mark it like this and draw it to this level. So they expect price to come back. As price come back to this level, we expect to see price push down. What it means is simply where institutions have taken their large order. Block simply means large order. Order block, block order. Okay, so people will mark this level and then expect price to come back and they will sell from that area. And then once you see liquidity cleared above this level, it even makes it more clearer. And then we have an order block above that area. And you can see another one here, this green candle. In this regard, in a bullish trend, you want to see the last bullish candle that price traded. That is your bearish order block because it will be the one to make price bearish. So you can see after price came back, it just touches it and come down. And likewise for a bullish order block is the last red candle that price printed before moving up. Let me see if I can see one. Okay, this guy, this last red candle that price printed is your bullish order block. If I expand it, you're going to see it. Now, I know so many of you people have your own definition of an order block. Some people will say, take the one that took liquidity. But this is what was originally taught from where I learned an order block. So this is the order block, not this guy. Except if you are dealing with demand and supply. I will teach you about demand and supply. But this is your order block, a bullish order block. I hope this is understandable. The next one is rejection block. Rejection block can be seen where you have pretty much equal highs, candles that are printing equal highs. Now, a rejection block can be seen when you have a price action of 3 candles, just like this. Let me show you this. 1, 2, 3. Okay. And then you have the middle candle with the highest wick, just like you see this one. So this is your rejection block. This is your rejection block. So you expect price to bounce around this area. You can see price came and bounced around that area. That is a rejection block. Let's see a rejection block, a 3 candle price action. Look at this, a 3 candle price action, 1, 2, 3. The middle one has the highest wick. This is a rejection block. I have a video about this on my YouTube channel. I think you should go and check it. I explain it in detail, how to even practically take trades with it. Rejection block is basically seen like that. Let me see if I can see another one, a last one, then we can go to the next item. I hope I'm able to see a rejection block. They are not easily seen on the chart. People confuse them with order blocks, but they are not order blocks. Let me see if I can see a rejection block. I'm tempted to call that one. I don't want to waste more time, but I hope you go to my channel and get more videos about a rejection block, a 3 candle price action where the middle candle has the highest wick, 1, 2, 3, relatively equal body. That is one of the things. Also, the bodies must be equal, and that will make it more valid. So this guy, price came and reacted around it. This is a rejection block. So this is according to order of priority, rejection block, and then old highs and old lows. Basically, at any time frame you're going to see old highs and old lows where price may come and grab liquidity above those levels. So you can see them. These are old highs, old lows. You can see what you see around old highs and old lows are basically liquidity areas where price will come and grab liquidity below this place, came back and this is, you can see, equal lows at this area. You can see them. You can see a lot of them, old highs, old lows. All these ones are old highs and old lows that you can find on your chart. This is an old high. You can see price actually came, grabbed liquidity, an old high at this area. Price came and grabbed liquidity above this level, an old high, an old high. So this is how to see an old high and old low. So once we have finished understanding this, now we're going to put them, bring this one here. So when you see price comes, you know how to prioritize them. Bring this one here. Okay, with what we have right here, if I use my replay tool, let me see if I can have this. Seeing it from this perspective, what we have here, let me adjust this clearly so we can see it properly. What we have here is basically a movement. Remember, this is our 50% level, that is the equilibrium. Price moved from here to here and then it is coming back. How do we do? It is now below discount, so we start looking from here. Do we have a mitigation block? No. Do we have a bullish breaker? We don't have. Do we have a liquidity void? Yes, we have a liquidity void, and then we are seeing price trying to fill it up. It is simply an imbalance. Price is filling it up. The next one is, do we have a fair value gap? Yes, we have a fair value gap. Where it is, this is it. Can you see the high of this candle and the low of this candle? 1 2 3 3 candle price action. We just place our line here. Let me see if I can get it this clearly. Let me just carry this too and have it like this. Okay, so this is a fair value gap. This is a fair value gap. Let me adjust it properly so you can see what I'm saying. So you can see this is a fair value gap, clearly seen. So we have seen one. And did price actually reacted at that point? Yes, price is reacting at this point. So we have seen according to order of priority. Once you are in discount level, you have seen according to order of priority. So we will prioritize fair value gap than what? Than an order block in this regard. This is an order block. Let me show you. This is an order block. But I'm not saying this is certain. You have to use your understanding of price delivery and see, because sometimes the institutions may not just respect this and just bounce here. You have to watch out for what is happening in the lower time frame, so you will be able to know exactly how to take your trade. So this is an order block, a bullish order block in this regard. Price never really came to that area, but is reacting around here. So we will go to a lower time frame. Once we see something like this, we will go to weekly. Let's see from weekly, what do we have? If we can see from weekly, that means we can have an insight. This is why you can see a clearly defined institutional order flow. Now, what is exactly is your order flow? We are in a discount, and a discount level is basically where people buy an asset. They buy it low and they sell high. So look at this from this area. We are seeing that same area. The weekly fair value gap is this guy. And look at this. The monthly fair value gap is this guy below the 50% level. And look at it, relatively equal low. What do we find around this area? Is basically where liquidity is residing. It is basically where liquidity is residing. Let me bring this here. This is where liquidity is residing, and price came, grabbed liquidity in the lower time frame. In the lower time frame, that is the weekly. Still on the concept of our PD array, we have arranged them properly. We are now seeing the action. So this is a rejection sign, a sign of rejection. So we can confidently say, okay, this fair value gap now can give us what we want because we can prioritize it. So we can play it and see how it goes. This is why I said you need to pay attention to your understanding of how smart money concept operates, such as structure, break of structure, change of character. Now we are seeing price. Now look at what happened. Price has actually reacted from here. That means that monthly fair value gap that we drag, this line, this big line, is now acting, and then we see a change of character. That's market structure shift. There is a shift in market structure from a lower low. This is a lower low, lower low. We can see a lower high, and then we change direction. So we can confidently say that this fair value gap is what these institutions wants to use. So we can prioritize it now and say this is what we want. Now we look out for a retracement back to another institutional order flow, we patiently look out for that. This is basically how I do my PD array. So looking at this, we're going to see how it happens. We don't enter trade here, except if you just want to enter. We will now look at what is happening. That is why you have to work with the rhythm of price action. Even though from here you can see price moved from here to this place, to this particular level. This is a mitigation block at this area. This is a mitigation block from this retracement down here. Okay, let me show you what I'm saying. This swing, from this swing to this level, to this last level of this place. This movement, look at the middle line. We are in a premium level, and we come here. When we come here, we can see mitigation block is prioritized. A mitigation block, look at what I'm saying. Remember that our drawing, a mitigation block is something like this. Let me show you how to identify a mitigation block. This is a mitigation block, a failure swing. It did not take the high, it just crashed down. Going back to the weekly now to see that if we find it. But the most important thing is that the institutional order flow this time around, please don't get confused. The institutional order flow is bullish, and then in the higher time frame we are at a discount. But look at this. It came, pushed from here to here, came down, had a failure swing, came to this area, came to this level. Where is your mitigation block? This guy, this last red candle that price printed, and price reacted from that level, is trying to push down to come, maybe to look for another institutional reference point before pushing. Now it will align with the higher time frame order flow. That is a bullish movement. So let's not get confused. I'm just trying to show you how this is done whenever you're taking trades. So let me delete this guy. The most important thing has been shown. So looking at what is happening, we can now take trades. But what do we look out for? If we will define this movement from here to here, we can take our Fibonacci tool, place it here, keep it up here. And then what do we see? 50% level below equilibrium. We are at a discount. We are at a discount. And then what do we look out for from discount? Let me see if I can keep this clean. From discount, these are the things we look out for. We start from mitigation block. Do we have a mitigation block? No. Breaker block. Do we have a breaker block? This is looking like a breaker block to me because we take the low here. Remember, this time around, a bullish breaker block, something like this. When you have a movement of something like this, let me show you. It creates a low, came back, test, and then take up. I hope you're watching this clearly from the distance. So look at this. This is how a bullish breaker block is formed. So look at this. Do we have something like that? Push, came down, and we can see this has pushed. So I'm tempted to call this a bullish breaker, even though it's this green candle that I'm supposed to pay attention to. Let's see, what do we have? Do we have a fair value gap? Yes, we have a fair value gap. Look at this. A fair value gap, a very small fair value gap here in between this guy and that guy. A very small fair value gap. So we don't need to pay attention to that breaker. A very small fair value gap here that came. So we can prioritize this, which means we need to go to lower time frame and find an entry. That is in the daily. We can find an entry to get into that. If we go to the daily time frame, all this we are doing in order to find an entry using the PD array. So the price is trying to create a new high, then you can go to the daily and find an entry probably that can give you a better advantage. Now this is the daily time frame. Okay, look at what is happening here. In the daily time frame, we have a change of character from this upward movement, came down, and it is coming. Let's see what is happening. According to our order of priority, what we see here, price came to this level. Is this an order block? Let's see this guy, this order block. Can you see? Did we see an order block? Yes, we can see an order block and then a fair value gap too in the daily time frame. A fair value gap at this area. Let me delete this guy. This is a fair value gap at this area in the daily. The one up here is your fair value gap. So This is how you can refine your entry. You can go lower to the lower time frame and find a better entry, knowing the fact that the higher time frame order flow is bullish. The higher time frame order flow is bullish. Let's go back to the weekly and I'm going to show you what I'm saying. Coming back to our weekly, we are still upward. From monthly, we have a fair value gap that is pushing price up, and then we are seeing it coming up to that level. Then we went to the weekly to have our entry refined after a change of character, came back, we could find an entry here, and then we push price. And after pushing price, we're going to see where price is heading. Basically, price came and fill up that fair value gap and then started moving up, moving up, moving up. It created a new high. This is exactly the goal. The goal is to create a new high, and if we can go to the monthly time frame, we're going to see it. The goal is to create a new high, and price actually did that. So let's see what we have right here. We can see that a new high was created. Premium and discount level has been seen. Let me delete these guys so we can have a clean chart. So this is basically our chart. So from discount, it took it to premium again. So you can see how to prioritize your institutional reference point clearly without any hesitation. Let's see what is happening as we play it to play out. If we have what we are seeing right there, price is playing out. Let me completely delete it so we can see what we have there as a whole without playing it as replay. So price actually came back after taking it to a premium level and delivering liquidity from there. As I told you, price delivers liquidity from discount, premium, premium to discount. Now from premium to discount, this is it, from this area to this place. So from here to this place, we are still waiting for price to push up again. So BTC is currently at a discount level. What do we have at this discount level where BTC is? We can see that we have old low. Let's take it at this discount level. We start from a mitigation block. Do we have a mitigation block at this area where Bitcoin is? We don't have a mitigation block. Breaker, do we don't have breaker? Liquidity void, we have a liquidity void which has been filled up. Fair value gap, yes, we have a fair value gap. This guy, let me show you. At the current market state, this is where the fair value gap is, and price is currently there. This place, price is currently here. You can see what I'm saying, and then we can see some reaction coming in. So we can confidently say that this guy can act as our level of interest. So we can go to the lower time frame and refine our entry until we find an entry that will take price to the premium level. So this is actually how to arrange your institutional reference point in order of priority, the PD array. Above your equilibrium is premium, below your equilibrium is discount. I hope this video is helpful. If you find value here, make sure you give this video a like and make sure you subscribe to this YouTube channel. You have any question, let me know. This is just a very basic explanation of how to use this, and if you get it right, I assure you guys that you're going to do a lot with this information. Thank you for watching. See you in the next video.